It's midweek edition of Business Morning. Thank you for joining us. I am BC Antibayo. We begin today's program with fresh data from the National Bureau of Statistics showing that the total value of capital importation into Nigeria stood at $3.8 million in the fourth quarter of 2019. Now, this represents a decline of 32.42% when compared to the third quarter of 2019 and a 77.67% increase when compared to the fourth quarter of 2018. Total value of capital importation in 2019 stood at $23.99 million versus $16.81 million in 2018. The largest amount of capital importation by type was received through foreign portfolio investment, followed by other investment and foreign direct investment. The United Kingdom emerged as the country of origin with the highest amount of capital imported, while Lagos is the destination with the highest amount of capital importation. Meanwhile, the House of Representatives has scheduled a consideration of the $22.79 billion external borrowing request by the President, Muhammadu Buhari, for today. And this comes barely a week after the Senate approved the loan, but not without protest from opposition senators. Some of the lawmakers were against the procedure for securing the loan, saying it was against the provisions of some laws, including the Fiscal Responsibility Act and the Debt Management Office Establishment Act. Well, the group also frowned at the approved 2020 to 2022 medium-term expenditure framework, the fiscal strategy paper, and the principles of federal character and federalism. We turn to the markets now. It was a free-for-all at the Nigerian equities market on Tuesday as the index fell by almost 5%. Now, that's the largest single-day decline in more than 8 years. Well, Eddie is here to tell us exactly what happened yesterday. Eddie, good morning. It's good to have you.
Good morning, BC.
Now, it appears that the market is really reacting to the impact of the falling oil price and, of course, the coronavirus outbreak, the implication of the coronavirus outbreak on the economy. But tell us exactly what happened at the market yesterday.
So yesterday, while other global markets rebounded yesterday, Nigeria was still left out because investors are fretting over what's going on. I mean, even though oil prices are rebounding, it's still below what we budgeted. So our reserves are dropping. So investors are just worrying about what, that will be, and then they're selling off. As you said, the market was down by almost 5%. We lost 665 billion naira just yesterday in the market. The month-to-date losses have come to about minus 7%, and the year-to-date losses are about minus 9.1%. Volume, value, and deals traded yesterday were higher compared to Monday's session. We saw about 594.55 million shares worth 4.2 billion naira traded yesterday. Market breadth was also negative, but unlike Monday's session, at least we had 3 gainers yesterday in the market against 33 losers. Now, all the sectors were in the red, and the banking index took the heaviest hit, down 12.53%. That's almost 13% in one day, and that's the largest single-day loss in more than 2 years. All the Tier 1 banks were down by over 9%. Fidelity Bank was down by 10%, so the banking index was really down. There were lots of sell-offs across the board. The consumer goods counter was also down. Dangote Sugar was down, Cadbury was down, Unilever was down, and all of this by more than 9%. The industrial goods counter was down, insurance was down, oil and gas was down. Only one counter lost yesterday, one stock on the industrial goods sector, and that was Oando, which lost about 0.9 points, over 9%. So that was what dragged the market yesterday. So what we saw yesterday was just sell-offs, and investors are still advised to trade cautiously. Unless you are a high-risk investor, then this is the time to take position in the market. Right? Yes, because you're supposed to buy low and sell high. So if you're a high-risk investor, you can take position in the market. But if you're a medium risk or a low-risk investor, you're just advised to trade cautiously. If we move over to the unlisted securities market, that's the NASD. Unlike Monday's session, where that market was positive, yesterday it was down, but marginally by 0.03%. The NASD index was at 706.74 basis points. The market cap is at 508.11 billion naira. Now, we saw about 400,000 units yesterday traded at 4.66 million naira in just 2 deals. So that side of the market hasn't seen a lot of activity, you know, but then yesterday, there were sell-offs there. If we move over to the fixed income market, the bond market was bearish yesterday as yields were up to, average yields rose to 10.7%. Yields expanded on the short to long end of the curve because of sell pressure. Now, if you can see there on the screen, there was more activity on the 26 April 2049 tenor. So that was what happened at the bonds market. In all, there were about 43 deals worth 12.44 billion naira. If we move to the Nigerian Treasury bills market, that segment of the market has been very weak. But thankfully, at least there was some trade yesterday, but we just saw only 2 deals. There's a primary market auction today, so investors are going to be focusing on that. So hopefully we'll see how that goes, and maybe there'll be some trading, you know, recorded for today. But then we expect this weak trend to continue in that segment of the market. The OMO market too yesterday expanded by 17 basis points to 14.88%. There were, of course, foreign investors are selling off because of what's happening right now, you know, apart from the global economy, also in Nigeria, how the oil prices crash has affected. Also, investors are selling out. But you can see that there was more activity on the 8th of October 2020, so about 188 deals just on that counter. You know, so in all, we saw about 255 deals worth 63 billion naira BC. All
right, Eddie, well, in spite of everything, let's just hope that, you know, a miracle happens and things, you know, change for the better.
We hope so. We'll keep our fingers crossed.
We'll keep our fingers crossed, Eddie. Well, we're still talking about the markets, and for many analysts now, the Nigerian equities market is looking very attractive now on dividend yield basis. But with the current economic trend, both locally and globally, who's ready to actually take that risk? Well, let's talk to Biodun Kerepe, who's the head investment research at AfriInvest. He talks to us from our studios at the Nigerian Stock Exchange. Good morning, Biodun. Now, how would you describe what is playing out in the equities market at this time?
Good morning. So, yeah, like the earlier speaker said rightly, it's basically investors fretting about all of the negative headline news that's flying around the world, you know, from the COVID-19 spread down to the development in the oil market, where we've seen Saudi Arabia and Russia suddenly just backtrack on cooperating with the entire OPEC community as to maintaining supply at certain levels such that there could be a bit of a stability for crude price. So all of this sentiment, all of this news is affecting our investors, our price in the market. And additionally, you know, for the likes of Saudi Arabia and Russia, I mean, already these economies are likely going to take a sort of backlash from this lower oil prices. In a way, Saudi may not be so hit. So take, for instance, we have the Aramco that possibly is the most profitable company in the world because it produces its crude at about $8 a barrel, very, very significantly low. I mean, compared to other regions where Aramco produces at about $2.8 a barrel. Other regions, you have maybe an Equinor doing $8 a barrel, a Total producing at about $11 a barrel, a Chevron doing about $12 a barrel. So in a way, Aramco Saudi still look well positioned in terms of where crude prices are, $30 versus your production cost of about $2.8 a barrel. Russia also maybe not very placed, but they pride that they've got reserve close to $500 billion that could sustain and support the economies for about 6 to 10 years. I mean, now all of this sounds relatively good news, but if you bring it down to Nigeria, which is where we continue to see investors fretting, because we could see that yesterday, at the sessions yesterday, market globally sort of recovered. There was a bit of a news that Russia might be looking at working with OPEC once again, you know, and that sent some positive signal to the market. But locally, we still see investors are fretting, and because they're looking at the impact of the low crude prices on the government budget, in terms of budget implementation, government revenue, in terms of expenditure, covering overhead, in terms of debt service, and so these are the things that the investors are looking at. More importantly, how this affects foreign exchange, how it affects the external reserve of being maintained by the CBN. We could say the CBN has been somewhat good, sending signals that until when reserves touch a 30 billion level, when crude price dropped to about $45 a barrel, that's when they will begin to worry. However, we still see reserve above $30 billion level, but crude price is close to $30 a barrel level. So that is a sort of a mix and a sort of disbalance there for the CBN. And in terms of reaction, we've seen the president call up emergency committee or council just to deliberate the way forward for the economy around, given the development we're seeing with the COVID, how it's affecting trade and merchandise, how it's affecting imports and exports. And for Nigeria, again, it's worrisome because if you look at our trade balance to GDP, we had it somewhere at about 4.5% in 2018. That's contracted to barely about 1.5% in 2019. So this is worrisome. You could say, because of the border shutdown, that is why we're seeing that number. But again, look at manufacturing growth rate is not expanding, just about 0.8% for 2019. That speaks again to consumer spending power and purchasing power, So the way forward really for the government at this point is to look at the budget once again, because some of the core assumptions of the budget already were globally, they are no longer attainable or achievable. So they need to look at the budget. They need to be more careful around the expenses they are carrying. Unfortunately, some of the costs, there's little they can do about those costs because they've been fixed. However, there are inefficiencies in the system. We could say there is no fuel subsidy existing anymore, but we still talk about fuel on the recoveries that is being accounted for. They have to look for a way of curbing this or eradicating this completely. And I think crude price at about $30 a barrel gives them that headroom to sort of clean up the balance sheet, clean up their account statement, sort of where they could completely wipe off on the recovery of subsidy, if you want to call it that way, and then across the other sectors, electricity, foreign exchange also, we're not saying CBN should devalue right away, but there could be a gradual and tactical way at which they could manage the FX such that the impact of the sharp drop in crude price is not being felt so much on the FX. They could do like a gradual devaluation, So these are some of the things we are thinking, and which I think they also should be thinking as to how to manage the books going forward, as to manage the economy going forward, And then this is no time to be doing audio fiscal support, audio monetary support for target sectors. This is the time to actually support these sectors. If it's agriculture, this is the time to go deep into agriculture and be clear about what we're doing, what we intend to achieve. The last 1 or 2 years, there have been so much that has been said, that has been done to support the agriculture sector. But if we look at food supply and what the sector is producing, I think we barely can meet the demand or the consumption of Nigerians on average. So this is a time where they need to go back to the drawing board. Unfortunately, it's a second opportunity for us to learn and to take decisive steps and actions as to how to manage and restructure the economy. We were here 2015, 2016. We saw crude at around $27, $28 a barrel. Now we're still just about that level. But then, and we know how it affected the economy those periods. So we have to do everything possible to avoid, getting to the doldrums where we were those periods. And what this means is if we're not careful, the sort of recovery we've seen over the last 3 years, this old development can rob the economy of it, So, speaking back to the market again, so this is what investors are looking at. They are pricing in. On one hand, you probably might might see investors trying to exit their Naira asset, trying to reposition it to dollar assets, probably via Eurobond instruments, or even just sitting in dollar cash, you know. It's just all about being defensive at times like this.
All right, Biodu.
You need to protect or preserve your capital as much as possible. So I think this is what is happening. But again, you know, as a Naira investor, you know, given where prices are in the market now, we've not seen prices at this level maybe in the last
talking about
4 years,
investors,
you know.
now, Biodu,
So
I was going to ask that in spite of all of these issues that you've mentioned now, do you think that this is actually the best time to move into the markets?
So, I mean, the question is, you need to look at the future, really, for investors. You need to take a long-term view of the markets, of the economy. Yeah, understandably, you need to drill down to specifics. So pick from sector-specific, look at companies specific. So how does all of these things affect the companies or the sectors generally? Lower crude oil price would sort of dent banks' balance sheets in a way, because you can see that some of these banks are exposed to the upstream companies via loans and advances, you know. And when some of these companies don't have hedge positions to sort of protect themselves against lower crude oil prices, it tends to feed back into how these loans are being repriced on the balance sheet of the banks. And you probably might see these banks sort of reprice these loans and take a bit of loan correction on their books. But the impact may not be so significant, you know. But if you take a long-term view of the economy, of the market, you know, we'll expect that investors should take position, really. Because the fact is, we don't think Saudi Arabia, Russia, and all of this noise around crude oil will continue for so long. Somewhere in between, they would come back to the tables again and have a conversation as to support the market from the supply side, which will also impact on the price side. So you're taking a long-term view of the market, you know. And if you're talking from the dividend yield, I heard you mention dividend yield earlier. Yeah, lower prices sort of raises the yield on dividend, but which is good, really, which is good. But that is basically historical yield. So we need to be talking about 2020, 2021, 2022. So if the outlook is that hopefully they get to sit around the table and do some negotiations and provide some stability for crude price, then hopefully for the COVID-19 virus also some.
All right, so I was just going to ask that the equities market has actually been on a downward slope for days now. It has lost about 7.1% this week so far, and the year-to-date has worsened to 9.1%. But how would a retail investor put money in and not get his or her fingers burnt at this time?
So let me just say this to you. On Monday, I pulled up Brent data from 2015. I pulled up the share price of Zenith Bank from 2015 also. I sort of look at a correlation and look at when we saw crude at the lowest price. What was the lowest price Zenith Bank, for instance, traded? When we saw crude trading at $27 a barrel, Zenith traded at about 9 Naira a share. So crude is currently about $30 a barrel. Zenith is trading at about 13.05 Naira a share. So that gives you a sense as to how low prices can get. Also, the estimate is that if this continues for the crude oil market, prices can go as low as $25 a barrel. So at $25 a barrel in a couple of weeks, a couple of months, you know, that also implies that a couple of weeks or months, you probably might see some of this stock trade at around these low levels of 9, 10 Naira level, speaking about Zenith particularly. So that gives an investor, a retail investor, a sense of how low these stocks can go, and just tells you to either buy the dip or you wait, let it dip a little more before you then take a position, you know. Okay. But no one really has the guts to call the markets and say clearly this is how low prices can get. So the best bet is, if you are optimistic about the future as an investor, you want to buy as prices correct downward.
All right, Biodu, thanks so much for sharing your thoughts with us this morning. Biodu Karipe is the head investment research at AfriInvest. But when Business Morning returns in just a moment, we'll turn our attention to the state of Nigeria's rising debt profile. Do stay with us.